Hey guys, Eric Soto, Mario Zindelli. Welcome back to part 2 of our discussion on FHA and conventional loans. Let's get our disclaimer out of the way, Mario.
We are real estate professionals. We're not mortgage brokers or lenders. If you have any other questions, please reach out to them directly.
If you don't have a trusted mortgage professional, let us know and we will refer you to one that we know and trust. All right, Mario, FHA down, out of the way. Let's take care of conventional.
I personally love conventional loans. One of the biggest advantages is how the PMI drops off at 20% equity. As we mentioned previously, the PMI on FHA loans sticks around for the life of the loan. However, on conventional, if you reach 20% equity, and that can be achieved either by the market going high or by you, the borrower, putting more towards your principal, that PMI payment goes away.
I love it. I love it. Another great plus is the condos are now available. They're back on the table. You can choose from a lot more communities. They are approved on an individual basis, and the process is relatively easy and inexpensive.
And you can get as low as 5% down payment on condos, which
Absolutely.
is great, right?
That's phenomenal. Yeah.
Right. Another positive is the lower PMI payments in the eyes of the financial institutions. The profile of the conventional borrower is less risky, so they charge less on PMI payments.
So we have a lower PMI payment, and it disappears
Right.
when you hit that 20% mark. Those are two big pluses to the conventional. I see a couple of things kind of in the middle of the road there.
Yeah, and one of those is the property condition. It can be a positive or negative. The positives of it are...
Well, on the positive side, oftentimes if a seller knows that there are some deficiencies like a roof needing to be replaced, they will discount their home. And so if you have a conventional borrower, they can purchase that home that needs the new roof, and they can take care of the roof with the funds that they have after closing. Therefore, they get a really good deal on the property,
Right.
and they're able to purchase it, whereas FHA, it wouldn't even be possible.
Right. On the flip side though, if let's say you didn't get an inspection of the home and you didn't know that the roof needed to be replaced, now you have to dish out that money that you didn't expect to do so in the first place.
Absolutely. So
Right.
that can be a con.
Another middle of the road positive negative is the lower DTI, and that's a positive. Why?
Well, like I said, it's going to keep you from being house poor. They have those lower limits so that your profile is a much stronger profile, and you're much less risk to yourself and to the institution.
That's right. On the flip side though is I want to get my wife the home that she always dreamed of.
Yeah.
So now I need a higher DTI because I want to get more home. I want to be approved for a higher price, and that's going to limit me if I go the conventional route.
Right. So again, it depends on where you're sitting on that.
That's
one.
right.
Another thing that's important to keep in mind on both FHA and conventional loans is that the rates and down payments vary by the financial institution. So make sure you ask a lot of questions about what programs are available. We appreciate you joining us for this video. We hope you have found it good. If you have, like, subscribe, and if you have any additional questions, go ahead and write it in the comments and we'll shoot a video about that topic as well.
Thank you.
Have a great day.